Good afternoon, sir.
Wait, I'll unmute. Yeah. Early, right?
Pardon? I didn't.
A lot of people have come in early. Good.
Yes, yes. Good sign.
So the speakers also will come into the same this thing? Yeah.
Yes. They will join. I have messaged both of them.
Okay.
I'm expecting them to join.
And share screen, all that, their presentation, all that will take care.
Yes. No, I will make them co-host. They can share it.
Okay. So that there's no confusion at that time.
Yes. And I've also asked them to share their presentation with me after the budget session so that we can email it to them.
Very good. No, that is very good. I see one Deepak Parekh.
Yes.
HDFC chairman has logged in.
Deepak ji, are you listening in? He's muted himself.
Okay.
We were expecting the vehicle scrapping policy, but unfortunately that hasn't come out with the budget. So
okay,
we'll have another session for that.
We'll have a separate session. No, we'll try to wind up by about 6:25. That's so that's 6:25, 6:30 max. Yeah.
Sure.
Beyond the stage, also this webinar fatigue will set in.
Correct. Already many members are now asking for a physical.
Yeah, physical we should do, but
slowly we'll start.
Yeah, slowly the vaccination drive, all that once it picks up.
Yes.
Good evening, sir.
Good evening.
Miss Harini.
Harini.
Good evening. Yes.
Sorry, I didn't change my
You are
name.
not returning calls at all.
Sir, I'm sorry, sir. I'm available only on WhatsApp.
Oh, regular phones you don't use. Okay.
No, sir. Sorry. Sorry, sir. I didn't know that you called.
That's okay. No problem. So your presentation is there. How many slides?
I have over 8 slides.
Oh, very good. So I thought take about 20-25 minutes and then there'll be Q&A, of course. Direct tax 20-25 minutes, indirect tax 20-25 minutes.
Sure, sir.
Throw it open to Q&A.
Sure. So first we'll start with direct taxes.
Yeah, direct taxes first.
Sure. Okay.
First economy. I'll give an overview, then direct taxes and then indirect taxes.
Yes, sir.
And then Q&A.
Sure.
Yes, Harini, I made you co-host so that you can share your presentation with all the participants.
So yeah, but that's going to be at a later point of time. You want to check whether the presentation is working?
No, that's fine. I mean, if you have it on your computer, you can always share it. I think Vinay has also logged in. I will make him also a co-host so that both of you can share as you present your seminar.
Sure. Thank you.
Good afternoon, Vinay.
Hi, good afternoon, Rishabh. Hi, Devang.
Anand sir is also with us.
Hello, Vinay.
Hi, sir. Good afternoon.
Good afternoon. So all set?
Yeah, sir, all set.
Hope some of your firm colleagues are logging in or?
Pardon me?
Your office, some of your colleagues are also participating or?
Yeah, few are participating.
Okay. So Devang, you will just briefly, go through their biodata also, introduce them. Huh?
Yes, I will introduce them. I'll hand it over to you after that. Sir.
Okay.
Q&A you will conduct, sir. I don't need to.
Okay, I'll conduct.
Okay. Good afternoon, Rajesh ji.
Welcome. Hello.
Yes, good afternoon.
Good afternoon, Devangji. Good afternoon, Anand sir.
Good afternoon. How are you?
Super duper. What's going on?
All going on. Good. How many are expected today?
Uh,
You'll answer this question at 6:30.
Yeah. We will get the answer.
From next year, we will have the budget meeting one day before the budget.
Very nice idea. We give the budget to the finance ministry. Eh?
Hmm.
Good evening, Mr. Anandji.
Good evening, Mahavir.
You are always first.
At least in logging in, you are first.
Well, thank you.
Chana, you are
Yes, even though Mahavir sir.
evening, sir.
Good evening. President also is there promptly.
So FCA members also are joining Finance Companies Association.
We have circulated in that group also as well.
Okay.
We're expecting some of them to join.
Jai Jindal Rajesh sir. Kolkata में join किया हो.
We have also invited all the FIPA members also as much as
very
many
good.
as we can.
FIPA President T.R. Rajan is joining.
He said he will. Yeah. Hello, Uncle.
Hello. Hi, Anand.
Hello. Hi.
Hi. Naba.
Good.
Yange, you must be very busy with budget presentation. Yeah. So, Yange, when are you speaking tomorrow? Where are you speaking?
Generally idling, that's all.
Okay. Tomorrow, Yange, where are you speaking? Tell me.
Tomorrow, nowhere tomorrow.
I want to hear you. The Zoom link anupumudiyuma, wherever you are speaking.
Already over. I should have sent one for yesterday, but there's one coming up on Saturday. But
Saturday, which association? Maybe I can.
In the International Center. I'll send you the link. I'm not only the introduction, but it's okay.
Lovely. Yeah. Please, I'll attend. Mahavir sir, namaskar sir. Namaskar. Na sir, ungaldu na budget reaction.
Because business is generally independent of any budget.
Nothing much for a trader or a businessman, right? This budget.
Yeah.
There's nothing much more for industries, right? श्रेयांक साहब नमस्कार रमेश नहार आपको मिलियो को नहीं कदे
growth perspective, like say, budget.
हाँ?
Yeah, growth prospect current.
हाँ, yeah.
Like say, definitely the business is Again, a chain linked to Aksharay.
Correct.
Good evening, Balu sir.
Good evening, sir.
Balu sir, namaskaram sir.
Oh, namaskaram,
Good
sir.
evening, Balu.
Good evening, PSB.
Good evening, Mr. Lahar.
Hello,
சார்
Madam.
ரொம்ப நாள் கழிச்சு
Good
பாக்குறோம் உங்க
evening,
face.
Madan sir.
ரொம்ப நாள் கழிச்சு உங்க ஃபேஸே
Madan
பாக்குறோம்.
sir.
நீங்க அன்னைக்கு வரல, மூத்தாவுடைய இதுக்கு வரல நீங்க.
இல்ல I had been to his place for condolence.
Oh, I see.
நானும் கைலாஷ் மசாலும் போயிருந்தோம் அன்னைக்கு.
சொன்னாரு, கைலாஷ் சொன்னாரு, அவர் போயிருந்தாரு. As soon as he returned from cremation, he called me. He phoned me up and told me.
எப்படி சார் ஹவுஸ் கோயம்புத்தூர்?
நல்லா இருக்கு சார். வெரி குட்.
மூடு. ஆனைமலை ஹில்ஸ் என்ஜாய் பண்றாங்க.
ஆமா ஆமா, ஆனைமலை ஹில்ஸ். இந்த பக்கத்துல ஊட்டி ஹில்ஸ்.
And then Survani water. Shirwani water, sir.
Shirwani water is another attraction, correct.
And Isa Foundation.
ஆமா ஆமா.
And Annapurna idli dosa.
Annapurna idli dosa.
But though nowadays they say that it's a better place to live for senior citizens, correct sir?
Lot of senior citizen homes have come up. Lot.
Illa,
more than
what is
25.
Illa, what is a striking comfort for senior citizens?
No, because the weather is very good. Coimbatore weather is very good. One. Secondly, it's a smaller city. Unlike Chennai, it's a much smaller city with a very good transportation facilities. In fact, if you want a taxi within 10 minutes, you will get a taxi. And the maximum amount that you will have to spend is only about 150 rupees maximum. To any corner, you have to pay only about 150 rupees maximum. Average, it's about 60-70 rupees. So that is the biggest advantage. There is good bus facility. Metro also is going to come.
Plus you got good flight connections also. Bombay, Delhi, ellame.
So, Madanlal, your idea is to shift the SIPA headquarters to Coimbatore, or?
When Anand goes in old age homes, I will also come there.
I am ready to go tomorrow.
I'll come there tomorrow.
Daily meeting.
I'll come there tomorrow.
Every day you are having meeting.
இல்ல சார் அப்படிலாம் இல்ல.
உங்க பிஸி சீசன் இப்போ பட்ஜெட் வந்தாச்சுன்னா ஒரு வாரத்துக்கு உங்களுக்கு பிடிக்கவே முடியாது.
Anand is living in Anand.
But one good thing with Anand,
Everybody will think of Anand only.
However busy he is, he always gives a time for South Indian Airports Association. Always. 3rd or 4th அன்னைக்கு கொடுத்துருவா டேட்.
They are unable to get rid of me.
Your expertise and experience.
We value your wisdom. "28 participants." Okay, இன்னும் கொஞ்சம் பார்க்கலாம்.
We'll start in 2 minutes. We'll start at 5 o'clock.
Yeah.
Sir, Anand is from Ernst and Young. Correctங்களா?
எல்லாம் retired பா.
இல்ல. நான் வந்து இங்கிலீஷ் நல்லா பேச தெரியாது. Ernst நான் சொல்லுவேன் Ernest, Young நான் சொல்லுவேன் Young. So he's Ernest and Young.
நீங்க left Ernst and Young இல்ல? You are still with them?
Almost next few months இருக்கு பாலு. By June my term is over.
Oh, I see. Okay.
He's retiring after TTS.
Good evening, Anand.
Good evening.
Good evening, PSB.
Oh, good evening, sir.
Good evening, sir. எப்படி இருக்கீங்க?
நல்லா இருக்கேன் சார்.
So what is your quick response to budget? One liner.
ஆனந்தா கேக்குறீங்களா? ஆனந்தியா?
இல்ல உங்களுக்கு கேக்குறேன். ஆனந்தா வருஷா பேச போறாரு.
Two youngsters to give the response. Let them give in their perspective.
No, I was asking PSB only one liner response. The reaction.
As far as I am concerned, it's a good budget. Even though for individuals, it is not very attractive. On the whole, it's a good budget.
Very good.
Good evening, Kailash. आपको screen is black.
Screen is black.
Yes. Your video is not working.
मैं नजर नहीं लगाऊं आपने. आप वीडियो ऑन करो सर.
ये तो ऑन करेगा यार.
Video is on. I think the camera is blocked for some reason.
Yeah, BSB sir. This 60 button பயப்படுறாரா?
வந்துட்டாரு.
Now,
Shall we start, sir, or shall we wait for a
1
minute?
minute, 1 more minute, and then we can start here.
Yeah, 32 participants. Okay. 1 minute we can be.
Okay.
Okay, now I am visible.
yeah.
Yes. Much
Yeah.
better.
Okay, thanks to Hemant, who has helped me to put on the screen.
We can see Hemant walking out.
Yeah, he's not joining for the session.
Yeah, he is definitely going to join. Office bearer.
He will join from different terminals.
Whatever is the Kailasa will be briefing Hemant. Kailasa will brief Hemant.
No, Hemant will join from a different terminal.
Yes, correct.
Oh, acha,
Sir, Parmeshwaran sir.
Gundecha is always fast.
Sir, Parmeshwaran sir.
acha.
Parmeshwaran sir. Sir, kekda?
But his voice is not, we are not able to hear him. Sir, unga voice varla. Your mic is blocked. Mute la irukku.
After some time, at the meeting starts, all of us will have to mute the mic.
Yeah.
Yes, we'll do that.
Yeah, right.
I'll do it.
அது அவரே பண்ணிடுவாரு நம்ம ஹோஸ்டே பண்ணிடுவாரு
அவரே பண்ணிடுவாரா? Oh, I see.
ஆமா.
ஹோஸ்ட் பண்ணுவாரு
So I think Hemant, you can go ahead.
Yes.
எல்லா குடுமி ஒரு கையில தான் இருக்கு
Okay, I'll mute everyone. Good evening. Okay. Good evening to one and all present here. Respected past presidents of SIPA, Mr. Pavan Trivedi, Chairman FCA, Mr. T.R. Racha, Chairman of FIPA, Mr. Rajesh Singhvi, President of MAHA. Welcome to our budget session, Budget 2021, everyone. The budget comes at an extremely difficult time. 2020 got a large part washed out, which means a huge revenue loss. Add to that the pandemic management costs. Surely the accounts for 2020-21 are not going to be a good looking one. The finance minister in her budget speech mentioned a vehicle scrapping policy, which will be announced soon. We will have the vehicle scrappage policy seminar as soon as the policy is announced. I would now like to introduce our speakers for today's budget session 2021. Mr. R. Anand. Mr. Anand, past chairman of SIPA, is a chartered accountant by qualification. He has served for over 20 years in Sundaram Finance Limited in key roles. He has over 10 years experience as partner in Ernst & Young from the year 2006 to 2016. He holds directorships in MMTC Limited, 5-Star Business Finance Limited, 5-Star Housing Finance Limited, Sterling Holiday Resorts Limited, Nani Palkhiwala Arbitration Center, and Chennai International Center. He has held important posts in several eminent institutions and has authored and presented several papers on accounting, taxation in regional and national conferences. He is a regular columnist in the Hindu business line on economic policy matters. Today we have Mr. Vinay Chajed with us. He is a chartered accountant and BCom graduate with over 6 years experience in audit, direct and indirect taxation and regulatory matters. He is currently working with PKF Sridhar and Santanam LLP. He has worked in a wide spectrum of clients in various sectors such as textile, NBFCs, logistics, banking, media, and information technology. Mr. Vinay has authored an article for the Chennai Timber and Plywood Merchants Association on effects of GST implementation and transition provisions. He has handled various assignments in different fields, including restructuring advisory, transaction advisory, indirect tax assignments for Indian Overseas Bank and Indian Bank, GST audits, representation before Commissioner of Income Tax, etc. Our speaker for today's indirect taxes, Ms. Harini Sridharan. She's a chartered accountant and company secretary by qualification. She has worked with leading companies like Harita TechServe, Ford Motor India Private Limited, and PricewaterhouseCoopers LLP. Ms. Harini has authored a book titled Returns and Payment Under GST, scheduled for release by ICAI. She has addressed various forums as part of her corporate career, and acknowledging her in-depth knowledge, she was identified as a faculty by the ICAI. She has penned a number of articles for various tax sites and institute publications to share her knowledge of GST. I request our speakers to highlight the key takeaways from the budget 2021, especially from the perspective of lending institutions. I will hand over to Mr. R. Anand. Thank you, sir.
Thank you, Devang, and good evening to all of you. First of all, let me thank all the three associations, South India Hire Purchase Association, Madras Hire Purchase Association, and the Finance Companies Association for collaborating one more year in putting together this budget event, this time budget 2021. As Devang mentioned in his opening remarks, the year is a very important landmark year from a completely different perspective, because we had witnessed one of the rudest health shocks ever the world ever witnessed over the last few years. So in that context, the framing of the economic policies became very important.
What is the email ID, Uncle? Anpur Nisan
at? Can everybody put their system on mute, please? Yeah. So in that perspective, the framing of the budget became very important because it had to consider the impact of the shock of the pandemic and also position the country for the next few years in a manner that over a period of 10 months had to be regained, not only from a principle to principle basis, but to ensure that the growth engine sort of compensated the loss which the country had to take over the last 8 to 10 months. So that was the challenge. What I propose to do is, over the next 10 or 12 minutes, just give you an overall context and paint the economic picture so that these two youngsters, Vinay and Harini, will take on to cover the direct and indirect taxes aspects, which affect all of us generally and more so from the financial services industry. Now, Indian economy, which was in size $2.9 trillion before the pandemic broke, shrunk by 7.7% for the fiscal year 2020-21. The world shrunk by 4.9% and Indian economy shrunk by 7.7%. Now, that was a given. Now, in the month of January or in the month of February, we are now in February, the growth agenda had to be completely redrawn. The government of India had essentially two routes to take. Route one, which everybody would call as a very conservative route, is to contain or arrest the overall debt slide and be very conservative in growth projections so that manage your debt today, even if it means a limited growth agenda for the next 2-3 years. This was route one. Route two is a more aggressive route which the government sought to take, is to forget about debt for the time being, increase your fiscal deficit for the simple reason that the only way to drive growth is now to borrow today and invest today to ensure that the growth engine starts firing from today. This is the more aggressive route which the government decided to take on 1st of February 2021. Now, we will all be wiser by the event after the event actually unfolds. But the majority view, and that is culminating by all the commentary discussions that have happened in the TV channels and in the press, seem to support this route 2 which the government has taken. But for taking route 2, all of us need to be a little patient because results will not come overnight. When you set a growth agenda based on fiscal deficit, which is going to be 7.5% of the GDP this year and maybe 6.8% of the GDP next year, 4.8 next year, is going to be, it looks very alarming because the targeted number as per the Fiscal Responsibility Act was 3%. We have overshot that. But be it as it may, we are overshooting it for a very qualitative purpose. The purpose being, we need to grow for the next generation. And that is why I look at this budget not for our generation, but it's a budget for the next generation. So you're putting the building blocks, setting the platform, putting all the structures in place for the next 5 years, 10 years, 15 years, 20. As I mentioned yesterday in some other seminar, this is not T20, this is not 50 overs. This is going to be a very arduous, very difficult test match, which you have to play session by session, carefully on an everyday basis. So this is how I would like to understand the economic contours of the budget. The 2 or 3 big ticket items for me are the items relating to healthcare, infrastructure, and financial services. We have never looked at healthcare more closely than in the last 8 months. We were forced to do so. Because healthcare was a subject, yes, but it remained as a subject for discussion at a very periphery level. But today, this subject has gained so much of traction, discussion, center, state, private hospital, public hospital, to primary care, tertiary care, number of labs, number of testing equipment, import, export, everything is now discussed around healthcare. The investment next year is 2,28,000 crores. There are breakup of that numbers. I'm not getting into that. But my only takeaway in this budget is healthcare is a very big ticket focus item agenda. And around that, a lot of other businesses will also be built because it's so important. The second big ticket item is infrastructure. And I want all of you to understand the multiplier effect of infrastructure because this is very important. Back in 1956, there was a theory called the Eisenhower theory, which was propounded in the US, which said if you invest $1 in infrastructure, it means 5 times activity, economic activity over a period of 3-4 years. $5 is the level of activity. Now, the finance minister is choosing infrastructure as big ticket because if you invest today in infrastructure, whatever the 5,54,000 crore is spent on capex for next year, there are so many other lakhs of crores which are going to happen in infrastructure directly and indirectly. But the multiplier effect is going to come by more jobs, more cement production, sale, more steel, more ancillary units, more other types of manufacturing activity collaborating with the infrastructure agenda. And incidentally, there is a model to provide financing through a developmental financial institution, which the government wants to spearhead on their behalf, but also making a very clear statement that private sector will also play a role in developmental financial institution. The old IDBA format, the old ICICI format. The third big ticket item is about financial services. In fact, the Reserve Bank of India governor had a meeting with all of us on a webinar on the 19th of January. And the focus was clearly on building the financial services agenda for the next 5 years. If we need to grow at 15% nominal rate next year and 11% real rate next year, and the following year it's going to be 6.8 and 8%, financial services had to back this growth. When I say financial services, it means banks, non-banks, unorganized financiers, and every individual who is in the business of financing will have a very key role to play in the next 5 years in the overall growth agenda of this country as is depicted in this budget. In fact, somebody asked me what is in NBFC directly. There's nothing directly, but there's plenty indirectly. And sometimes the indirect gain for an industry will be more lucrative, more pronounced than a direct gain, which looks very direct on paper, but it can really not happen on paper. So to me, the financial services agenda in terms of cleaning up the bank balance sheets, privatizing 2 of the public sector banks and 1 insurance company, and then the whole messaging around financial services sends a very, very confident note to all of us that the unorganized financiers and the NBFCs will play a very important supportive role to the overall financial services agenda, which again is going to support the manufacturing, infrastructure, the all support functions of the main functions of the government. So if you look at it in a holistic manner, the whole budget is around increasing the size of the cake, thereafter distributing it equitably. The size of the cake has to go up by better growth. The equitable distribution has to happen by a more calibrated attempt to ensure that the distribution happens not only among the metro cities, but also in rural India. So there is plan around that also. And for this, the union budget and the state budgets are very important pieces of documents that we need to understand collectively. The time has come, and this is the last point I will make and then hand it over to the two youngsters who will take us through the provisions of direct and indirect taxes. Is the time has come that the players of budget making and budget monitoring and budget implementing are not only the government officials. From now on, it has to be the entire 1.3 billion population of this country. Who are the key players? All of us are key players. We have a role in formulation, we have a role in implementation, we have a role in monitoring. The question is, we have to play that role. And how do we play that role? We have to decide how to play that role. So once we do that collectively and partner the overall agenda of nation building through growth, to distribution of resources in the way it has been envisaged, then all of us will reap the benefits of the pronouncements in this budget. It's going to happen, but it will happen in its own way, but we have to make it happen. So these are some of my preliminary thoughts. To be very honest, I didn't want to bore you with all the numbers and all the jargons which are anyway available. But I only want to make one final point. The Economic Survey of India is a very important piece of document. And youngsters who have assembled here, and because this budget is all about young India, there's a very important chapter on innovation and how innovation and techniques and tools of innovation have to be used now, not only by government, but non-government agencies to ensure that we put the right framework in place for the desired rate of growth. I will stop with that. So I will now request first Vinay Chajat, who is a very young chartered accountant. In fact, I must appreciate the organizers to blood some youngsters. In fact, my own mission is from next year, the average age of speakers, including the moderator, should come down to 40. Unfortunately, I am pushing up the average age today, but from next year, that will also come down as time progresses, because the budget will force the average age of speakers to come down, if not for anything else. So may I now request Mr. Vinay Chajat to make his presentation. He will speak for about 20-25 minutes on what the key pointers of direct taxes are. Thereafter, Harini will take us through the indirect taxes, and together we'll take the Q&A after both the presentations are over. Vinay Chajat, please take over.
Thank you, sir. Thank you, Mr. Devang, for such a warm introduction. Also, thanks to Mr. Rajesh and Pawan for providing me with such a wonderful opportunity. So let's get started. I will share a PPT. Yes. So the first limb that I'm going to cover is individual taxation. Though there is not much that has come in this budget for individuals, but there are a few key highlights which I'm going to present. The first one being on withdrawn on exemption of interest received on contribution by the employees. So here one major point that is to be noted is that what is being withdrawn is interest on contribution about 2.5 lakhs by the employee himself. So the contribution by the employer per se is not exempt, is still exempt. So only the employee contribution over and above 2,50,000 will be covered here. Also, it covers public provident fund and statutory provident fund. So an individual making contribution in his own capacity beyond 2.5 lakhs will be the interest on that will be withdrawn. The next one is an exemption which is proposed in connection with wheel travel connection. So here, this is mainly due to COVID, because the block calendar which ceases to exist on 2021. So many of the employees could not travel. Therefore, just to compensate that, government has proposed it that if there is any expenditure which is incurred by the specific employee or for his family, then the same will be exempt up to 36,000 or 1/3 of the specific expenditure whichever is incurred. But here, one point that is to be noted is that the specific expenditure means the expenditure which is incurred by the employee for his family, and it should be with respect to the supplies which are chargeable at the rate of 12% under GST. So that is one important point that is to note. And if we carefully analyze why it's 12%, so that the employees don't spend on food or something, whereas the tax rate is only 5%. So we must appreciate this move that they're motivating to spend towards something very reasonable and not on luxury or food or restaurants item. The next one is so we have seen that over the years government has been motivating a lot to the individuals to invest and to get into a residential property. So there is one more relaxation that has come in. This relaxation is in connection with additional deduction for the interest on housing loan up to 1.5 lakhs. We are all aware that up to 2 lakhs interest on a house property for self-occupied property is exempt. But this section provides for additional 1.5 lakhs of deduction. So this section provides that the loan should have been sanctioned on or before 31st March 2021. Now this has been extended up for one more year up to 31st March 2022. Taxation of proceeds on high premium ULIP. So this was one of the big tax planning where most of the high net individuals were making, wherein the maturity value would be huge. So they would be covered under the 10% exemption, wherein the total proceeds, including the gains which they are making, would be exempt. So to curb this, department has CBDT has proposed an amendment, wherein if the contribution as premium is more than 2.5 lakhs, then the proceeds from the same would not be exempt as earlier. So this is a good move where especially this has come for ULIP. So ULIP also has an investment link. So now they have removed the exemption and they are bringing this under the definition of capital asset. So on maturity, the difference will be taxed at short-term capital gain and long-term capital gain. And one good thing is that these will be classified in par with equity shares, wherein the tax rate will be 10% for long-term capital gain and 15% for short-term capital gains. There is one more relaxation for the senior citizen for the age of above 75, wherein they are not required to file the income tax return if they have interest income and pension income. But I'm not sure how this is going to help, because the bill proposes that the pension income and the interest income must be received in the same bank account. We all know in the current era where everything is digitalized and everything, almost everyone has one or two accounts. So how this will work is what we'll have to see. Additionally, also if there is say even a small dividend income that is being earned, or most of the senior citizens, they have a small house property where they earn a minimal rental income and all those things. So those cases will not be covered here. So we'll have to wait and watch that what is the target audience that is getting covered under this exception. But government has tried to give some benefit to senior citizens. Also for dividend for advance tax, this was one issue which was highly debated when the amendment was proposed last year. So now they have come out very clearly that you need not estimate or forecast what will be your dividend, and you are not required to pay advance tax on that. As and when you receive it or when you get the right to receive it, only at that point of time you are required to pay capital gain, pay tax for that advance tax. So this saves some interest cost for the assessees, wherein the dividend income cannot be predicted. So next, we'll move to corporate taxation. So one big move that will affect all the big companies and companies which have which get into restructuring and all those things, wherein now the goodwill is not classified as an intangible asset for depreciation purpose. So all these years, whenever there was restructuring, there would be goodwill for which depreciation would be allowed. And this was a debatable issue even earlier, but there was light on this issue when Supreme Court gave a ruling. Now, the bill has been proposed specifically to overrule this ruling, which was even addressed by our Honorable Finance Minister in a speech. One another thing where they have done, to control the tax evasion is enhancing the scope of slum sale. So slum sale was basically used as one of the instrument by many taxpayers, where they would just enter into a barter kind of transaction, and they would say it's not a sale, but it's transfer. It was slum transfer and not slum sale, and it would be completely be tax exempt. And there were also rulings in the favorable of the SEC, a lot of rulings. So this has come with the intention to evade the tax, because originally when slum sale was introduced, the intent was not to help the SEC wherein they can escape the tax. So they have tightened the regulation to this respect. The next point is regarding delayed employee contribution. So must say this was also one another litigative area where across different courts there were different rulings, both in the favorable of the SEC as well of the department. So there are a lot of courts, in fact, which have given the decision in the favor of SEC. But now, an IT department had always had a separate view on this, and they have come out very clearly that any employee contribution that employer is collecting, and if it's not remitting within the due date of the respective fund, it will be taxed. So this is basically to ensure that the employer is not enjoying the time value of money. So he's being penalized for this. So this was a very highly debatable issue, which has been put to rest. But now what comes into another question is that what happens to the decision that were already passed? Because this is specifically introduced as an explanation. And it's a standard thing that explanations are generally meant to be right from the start of the section, because what they do is they just explain the section. They are not a new amendment. So per se, what happens to the decisions which are in the favor of the SEC? Will this be reopened by the department or what? This is something which we'll have to wait and watch. Next, one more in connection with encouraging investment in house property, and due to the COVID impact on the economy, what they have done is that they have increased the safe harbor limit. So basically what safe harbor limit is, the difference between the stamp duty and the actual sale consideration cannot exceed a percentage which is specified. So this limit is increased up to 20%, so that the investment can be done with a deviation of up to 20%. The next point is in reducing the tax base for the tax audit. So this is one big relief for the small and medium business entrepreneurs, where they, with the GST coming in, they have already the cost of compliance has increased. So basis that the cost of compliance with respect to tax audit might be reduced. So here, anyone with a turnover, any taxpayer with a turnover of 10 crores, and wherein the cash transaction both with respect to receipts and payments are less than 5%, will not be required to get his tax audit done. So a good move which saves the cost of compliance. Now, one complication that is here is that how to compute the total receipts or the total payments has not been defined in the act anywhere, or neither as a clarification or a circular from the department. But this comes in ITR, wherein they have specifically said that any turnover, including the capital account transactions, are included. So this we should interpret that only the turnover and the receipts or the capital contributions only in connection with the business should be considered, and not the other aspects. To boost the startups, again, department has provided 1 more year's relief with respect to startups, wherein any startup which is registered up to 31st March 2021 can avail, up to 31st March 2022 can avail the deduction for 3 years for the 100% of profits they are making. So this is good move, especially in this era of innovation, which Anand sir was mentioning. So this is one very good move to promote the innovation, and also to enable investment. They have also extended that any investment against the capital gain in these startups would be exempt. This has been extended for 1 more year. The next limb will be moving is towards income tax assessment related. So now belated return and revised return, the timeline has been reduced. Previously, belated return or revised return could be filed up to 12 months from the end of the relevant financial year, but now it's been reduced to 9 months. So the taxpayer will have to be more careful and will have to file their returns duly within the time, because there is no provision under Income Tax Act where you can file beyond the timeline which is given for belated return or revised return, unless the assessment proceedings are initiated against. The next one is on reduction of time limit for completing assessment. So this is one very good move from the government, wherein which provides for the ease of assessment. So over the period of time, government has been working to reduce this due date for completion of assessment, and now especially with e-proceedings into picture, wherein things can be done more easier. The government has reduced further this time by another 3 months. So I've given a table wherein for assessment year 2021, it is proposed that the assessment, if any, needs to be completed by 31st December 2021. The next very important provision that has come into this budget is regarding income escaping assessment. So here one major thing that has happened is the section is completely replaced. So just to give a background how this is going to impact us, I would just give a background of the existing section. So in the existing section, if the assessing officer had reason to believe that an income has escaped assessment, only then he may initiate the income escapement assessment. But now this particular phrase, reason to believe, has been removed, and they have replaced with any information flagged by the board or any objection which is raised by CNAG. So this increases the base for reassessment. This is for the main reason that in the past there have been various decisions by various courts saying that reason to believe cannot be mere change of opinion. It needs to be something beyond that. A new conclusive evidence should have been in the possession of the assessing officer to enable him to reopen the assessment. But now, having removed this reason to believe, it widens the base for the department to initiate the income escaping assessment. But this again, they have tried to limit it, wherein the income escapement requires prior approval from the higher ranks of the income tax authorities. And the next slide is on reduction in timeline for initiating income escaping assessment. Now, previously, wherein the tax involved was less than 1 lakh, the reassessment could happen for 4 years. And where the tax involved was more than 1 lakh, the reassessment could happen for 6 years. But now what they are proposing is where the income, please mind, here what they refer is income and not the tax. So if the income is more than 10 lakhs, then the reopening can happen up to 10 years. And if it's less than 10 lakhs, less than 50 lakhs, then they can reopen up to 3 years. Now, indirectly, there for few assessees where the tax is more than 50 lakhs, and there the reopening previously would be 6 years, but now it would become 10 years. So indirectly, it has widened the department's perspective to enable to include more income escaping assessment beyond 6 years, which previously was not allowed. So this is just an illustration. So in assessment year 22-23, so reassessment can happen for last 3 years, which is from assessment year 19-20 to 21-22, and reassessment can happen beyond assessment year 19-20, but up to assessment year 2012-13, if the amount of income involved is more than 50 lakhs. The next key highlights are with respect to constitution of DRC, Dispute Resolution Committee. So this is one good move to ensure that the disputes are getting settled easily and at initial stage itself. So this is specifically for small and medium taxpayer. They also define small and medium taxpayer as the one whose income as per ITR is less than 50 lakhs and the proposed adjustment is less than 10 lakhs. So must appreciate that department are taking steps from all the angles to ensure that the assessments are getting closed earlier, especially after Vivad Se Vishwas scheme. So a good move to ensure that there are not a lot of disputes that are pending with the department. The next one big amendment that has come is constitution of board for advanced ruling. So now the authority for advanced ruling is proposed to be replaced by board for advanced ruling. The only change here is the orders of the boards of advanced ruling are appealable before High Court by both taxpayer as well as tax department. Previously, as per Income Tax Act, these were not appealable before High Court but only before Supreme Court, and that also only in limited cases. But now this has widened the scope both for the taxpayer and tax department to raise questions on the advanced ruling, which will be ruled by board for advanced ruling. One more initiative that is taken is discontinue of income tax settlement. So previously the assessee was allowed to go and make a disclosure of his income and pay taxes thereon and enter into a settlement with the settlement commission. But now the department has proposed to cease this. One of the main underlying reasons for this is that if we all know in last 4 or 5 years, government has come with a lot of schemes with respect to income declaration, back money declaration, and all those things. So they have given enough opportunity for the assessees to declare true disclosure on their own and pay taxes thereon. And now they want to stop this so that they can penalize the ones who are cheating even after giving all these options. We'll be talking next about amendments regarding TDS. So this was a very heated conversation when it was proposed in Finance Act 2020 regarding TCS for sale of goods, wherein the seller would be required to collect TCS from the buyer for the sale value exceeding 50 lakhs. A similar amendment has been even brought for the buyer. Now, the buyer whose turnover in the previous year is more than 10 crores and who is buying for goods only for the goods value more than 50 lakhs would be required to deduct TDS at the rate of 0.01%. Now, one thing that is to be noted is this section specifically provides that if TDS has been deducted under 206, TCS has been collected under section 206(1)(h), then TDS and even then the TDS under this section will be applicable. But correspondingly, there is no amendment in TCS section. So TCS section for now provides that if TDS is been done under any other act, any other section for that matter, then TCS will not be required. So with introduction of this section, the TCS section which was proposed in the last budget would become null and void, wherein because the transaction would be covered here and already TDS would be done here. So having done the TCS requirement would not be there. Now, one more thing that we'll have to note is that under this section, the TDS section, the import of good is not exempt, unlike TCS section where export of goods were exempt. So now imagine a situation where the buyer is say in US and he is importing goods from India worth 1 crore. Now, will he be required to get registered under Income Tax Act and pay TDS is one big question. We'll have to wait for clarification from CBT in this regard. One another stringent practice that department has gotten is that they have coming with higher rates of TDS and TCS for the individuals or for the persons who are not furnishing their income tax return. So now the deductor would be required to get even the income tax return of the deductee and make sure that the deductee is filing his income tax return. If the deductee has not filed his income tax return for last 2 years, then he would be required to make TDS at higher rates, which would be twice the rate which is required or at the rate of 5%. A similar amendment is also proposed in TCS. So even in TCS, the collector would be required to collect the income tax return for last 2 years. So the intent is they want the deductees to file the income tax return, because a lot of deducting where the TDS is deducted, they just come with an opinion that already my income is taxed, therefore I'm not required to deduct TDS. So they are coming with a proposal wherein higher TDS rates would be deducted. So that's it on direct taxes. So these were the major provisions. Over to the host.
Thank you, Vinay. First of all, I must really appreciate your painstaking efforts. You tried to list out most of the significant amendments. In fact, I wanted to mention to all of you in the beginning, I would like to do it now, that this is one where there were not too many substantive or very, very major direct taxes changes or amendments. The finance minister said, I don't want to touch the rates. People have been taxed enough. So therefore, we'll try to raise resources elsewhere through disinvestment, monetizing of assets, and so on and so forth. So to that extent, I remember in the 1990s, maybe even the turn of the century, every finance bill used to have even sometimes 180, 190 amendments. I'm told the total number of amendments carried out in this finance bill is about 30 to 40, thereabouts. Out of which substantive are about 4 or 5. But be it as it may, I think it is important for all of us to at least know sequentially what are the major amendments, whether it is Employees Provident Fund exemption being withdrawn, or the income escaping assessment, the reopening time truncated from 6 years to 3 years. These are some of the important changes which we should take note of. From our overall business modeling standpoint, I don't think it is going to give us any sleepless night to understand what these direct taxes changes are, but it's important that we go through this, and I'm really thankful to Vinay for doing a very thorough job of listing it out and explaining it in a very cogent manner. Some questions will come from the Q&A, we'll take it. I would now like Harini to spend the next 20 minutes to take us through some of the GST, customs, and other indirect taxes proposals. Incidentally, all of you should know, December, January has been a record for GST. December, we collected 1,15,000 crore. January, 1,20,000 crore. And after Harini's presentation, this month it will be 1,30,000 crores.
A very good evening to you all. Thank you, Anand sir, for the very wise introduction. When I just heard your introductory remarks, I was just remembering an old saying. This again is an old saying. You said that you need young blood and you need to, all oldies need to come out. That's what you said, right? I just remembered a saying. Old friends are like gold. New friends are like diamond. Once you get the new friends, you shouldn't forget old friends, because you need gold to hold diamonds. So you should be the guiding force for us to lead and grow better. So you shouldn't go out in this juncture, sir. So that's on the overall remarks. Yeah, thanks Vinay for the wonderful presentation on the direct taxes. So here on the presentation, here on my presentation of indirect taxes, I've just tried to cover only the major highlights, and there is not much of procedural aspects or much of schedules that I'm taking you through the presentation. So it's going to be a very short presentation. These are the major highlights that are there in the indirect taxes. So the first provision is that the input tax credit has been meddled with. I'll explain what has been done on the input tax credit. There has been a lot of shockers on input tax credit month after month. So it all started from October, and from there on, there has been a lot of shockers. I'll explain what is the exact input tax credit shocker that we have. And then the export rebates has been confined to certain notified supplies. So earlier, the refund on exports would be available. Refund on export rebate would be available for all class of suppliers, but now it's going to be confined only to notified supplies. And then a happy news for you all, there's no GST audit anymore. And I saw a lot of industries breathing after reading this provision of removal of GST audit from the GST Act itself, but a lot of professionals are fuming. Then after certain rulings, Supreme Court rulings, the principle of mutuality has been clarified on GST. We'll see what has been done, what amendment has been done. And that is on the GST part. On the customs, there is a customs and excise, there's an introduction of a new cess called Agriculture, Infrastructure and Development Cess. And the finance minister has specifically mentioned that this is not going to add to your liability, be it excise or be it customs. This is not going to be adding to the final cost. It's just going to be a reduction in the basic customs duty or in the basic excise duty, and there's going to be increase in the cess element. So this is just to have a proper allocation of funds to the central government alone. So whenever amount gets into a cess component, it will not be distributed from the it will not be distributed to the state government. It will be available only for the central government's disposal. So that's the way in which they have planned and brought in this agriculture infrastructure and development cess. And then a couple of procedural parts on the customs that it's definitely going to be ease of compliance. One is they're going to complete the customs investigations. They're going to make the issue of show cause notices time bound. The maximum period from initiating the customs investigation, a person should receive the show cause notice within 2 years. But what is initiation of customs investigation is again a question there. And then certain conditional customs exemption, customs duty exemption is going to be valid only for a period of 2 years. So it's not, the exemption itself has come with a time limit. Whatever is going to be available as an exemption is only going to be available for certain period of time, that is 2 years. And the general provisions, we'll see what it is. So moving on to the first part, input tax credit. So as I was telling you, input tax credit, a person can avail the input tax credit only if he complies with all the conditions that has been mentioned under section 16. So sorry for mentioning the section numbers. I'm not able to talk without section numbers, but I'll explain the provisions. So the provision here, the GST Act has mentioned that a person, only when he has a tax invoice or a debit note, only when he possesses a physical tax invoice or a debit note, he will be eligible to claim input tax credit. Second, he should have received the goods or services only when the goods have been received or the services has been received. It shouldn't be such that the advance amount has been paid and the goods has not been received or the service has not been received. In that case, the recipient would not be eligible for input tax credit. The third is the tax charge should have been paid to the government. Whatever has been charged from you, from the charge by the supplier from you, should have been paid to the government, and you should have furnished the monthly return to the government. If all these 4 conditions are satisfied, I'm aware that I'm saying 4, even though the conditions that I mentioned on my screen is 5, because there is a new condition that has been introduced saying all the details that has been furnished by the supplier, and such details should have been reflected in the recipient's GSTR 2A. Only those transactions can be taken as an input tax credit. So what really does this provision say is only when it is not only when you have paid the tax to the supplier, if you have paid the amount to the supplier, you are eligible for input tax credit. You should ensure that the supplier has paid the amount to the government. So there is a condition that is imposed on the recipient. There is an additional responsibility that is being imposed on the recipient to ensure that the supplier is he is properly complying with the rules and regulations. He is properly discharging the tax to the government. So they have brought this intent. They have reflected their idea through various provisions. So they have when GST was introduced, if you all remember right, they said only when the amount is reflecting in the receipt, only when the tax is being paid by the supplier, the recipient will be eligible to take the input tax credit, because all the robust matching mechanism was already provided by the government itself. It was a proper structured manner such that GSTR 1 would be there, and GSTR 2 and GSTR 3, all the returns would be available. But once GST got implemented, whatever is the work that needs to be done by the assessee, that was only available. GSTR 3B and GSTR 1 was only available. GSTR 2 and GSTR 3 was not available. Only 3B and 1 was available. So they had initially, when they introduced the GST Act, they wanted to ensure that only when the tax is being paid by the supplier, it should be taken as a credit by the recipient. That was their original idea. So through that they reflected. Second, they brought in a new provision called 43A, which was never effected. They had mentioned that not more than 20%. They had given a difference of 20% between the amount that has been furnished by the supplier and the amount that has been taken as a credit by the recipient. The difference could be 20%. Then slowly this section was not affected, but this came in as a rule, as Rule 36(4). The same provision came in as a rule, which was again having a differential percentage of 20%. This 20 was further reduced to 10%, and from January 2021, it became 5%. But after introduction of this budget, they say it should be 100% matching. Only when the details of the invoice has been furnished by the supplier and the amount has been, and the transaction has been communicated to the recipient, only then the recipient will be eligible to take an input tax credit. That has been introduced as a condition by itself in taking input tax credit. So there will be zero difference. So this, if you ask me whether this provision will stand, it is definitely going to be a subject matter of dispute. There's going to be a lot of questions that's going to be raised, because the recipient cannot go behind the supplier to ensure that he files the returns and pays the taxes. But then again, there is a possibility that this provision will stand, because only when the amount is paid by the supplier to the government, it becomes a tax. Only a tax amount can be taken as a credit. Input tax credit is a credit of input taxes. Only when the amount is paid to the government by the supplier, it becomes a tax. So it can still be valid. So we can argue it both the ways. So this is the first provision that I wanted to discuss with you. The second provision is on the section 16 of IGST Act. So whatever we discussed is on the CGST, and the next provision is on the IGST. So if you look into the definition of zero-rated supplies, the definition of zero-rated supplies has been truncated. Only when a supply is being made to the SEZ unit or SEZ developer for authorized operations. So earlier, whatever is a supply that is being made to an SEZ unit or SEZ developer would be treated as a zero-rated supply. What is the benefit of being a zero-rated supply? You can claim refund on the supplies that is being treated as a zero-rated supply. In no other cases other than zero-rated supplies and inverted duty structure, you will be eligible for refund. So it is only when it is a zero-rated supply you will be eligible for a refund. So earlier, all supplies that is being made to an SEZ unit or an SEZ developer would be treated as a zero-rated supply. Now only those supplies that is being given for authorized operations would be treated as a zero-rated supply. So this is the definition of zero-rated supply. Now, second, any exporter was having two options of claiming a refund. So as I was telling you, all export transactions would be treated as a zero-rated supply. So all exporters would be eligible to claim refund. So claiming of a refund can be in two ways. One is he can claim it as an export rebate, or he can claim the unutilized input tax credit. There were two options that were available to him. One is pay tax, take input tax credit and claim the balance as a refund. The second option is you don't pay taxes, but whatever is the inputs that you have received, the taxes that you've paid on the inputs, that you can take it as a credit. So now the first option of paying taxes and claiming input tax credit is now restricted only to notified supplies. It's not going to be available for everyone. So earlier this was available for everyone. So whenever there was whenever the SSC wanted to, whoever wanted to avail the first option of export rebate could have availed it. But now going forward, it's going to be available only for certain group of persons, set of persons, or certain supplies. It's not going to be available for all. Now, what is the disadvantage to the exporters because of this? Number one, the exporters will not be able to will have to file the refund applications on time. They will not be able to wait till the supply is coming. Whenever there is an outward supply, they can file the returns by stating that I have an outward supply and so much is input tax credit, and then you can claim as a refund. That's not going to be the case anymore. You will have to claim the input tax credit on time because there's a time limit for filing refund applications. So you will have to do it on time. Second, very important disadvantage because of introduction of this provision is ITC on capital goods will not be available to any exporters. So the refund on ITC on capital goods, I stand corrected there. So whatever is a refund on refund of taxes that is being paid on capital goods will not be eligible anymore. Because it was not available earlier also, but then whenever a person had a huge capital investment, he had the option of going through the export rebate option, but that option is now closed and it is available only for certain suppliers. So it is not available for all now. So that is on the applicability of export rebate that is being given only to certain set of persons. Number 3, the realization of export proceeds should be in accordance with FEMA regulations. Most of the companies comply because they'll have to comply with the FEMA regulations. It is not, GST should not be looked upon as a standalone act. We'll have to have an overall outlook. So any company would have definitely complied with the FEMA regulations. But then had you not complied, had you not received the amount on time as per the FEMA regulations, then you will have to deposit the amount of refund that you have claimed. So this was already given by way of Rule 96B earlier. So they argued the condition was not available in the Act. How can you bring in a condition that is there in the rule as a primary one? You will have to bring something in the Act and only then in the rules. So they brought in a proviso to section 16(3) stating that the registered persons will have to deposit the refund amount within 30 days of expiry of time limit. And then your favorite slide, I hope so, there's not going to be any more GST audit. So earlier, every person who was having a turnover, aggregate turnover of not more than 2 crores was liable, of more than 2 crores was liable to get his accounts audited by a chartered accountant or a company secretary. And there needs to be a reconciliation statement in the form of Form 9C, which needs to be filed. And it also needs to be certified by a chartered accountant or a company secretary. It is not only the accounts, but also the reconciliation statement that needs to be vouched and signed by the chartered accountant. So there has been a lot of representations that has gone in from the professionals and from the industry end for extending the due dates. And there has been the form itself was dispensed with for people below 5 crores for the year 18-19, 9C. And then an option was provided to file 9 for 17-18 and 18-19. So there were a lot of relaxations that was given for filing the annual returns and reconciliation statement. Now in this budget, they said no more GST audits. You need not get your GST audits done by a chartered accountant or a company secretary, but instead you should file your annual returns with a self-certified reconciliation statement. You still have to do the process, but you need not take the help of the professionals. It's all on your head now. The industry will have to employ their own professionals, or you can take the help of a chartered accountant or a company secretary also, but that is not being mandated by the Act anymore. They will not be signing the financials for you. There'll not be any professional responsibility going forward. So that is on the GST audit. Moving on. Earlier, whenever a service or a good is being supplied by a club to its members, then we had a doubt whether whether this is a supply or not, whether this will be liable for GST or not. Because we always had a doubt whether club is a distinct person from its members. Club is operating on behalf of its members. Can we treat both club and the members of the club as distinct persons? So to increase the confusion, we also had a Supreme Court decision saying that the club and its members are not two distinct persons. Whatever is a supply that is being made by the club to its members, whatever is the service that is being rendered by the club to its members will not be treated as a service, and no service tax liability would arise. That was a decision that came in State of West Bengal versus Calcutta Club. So that it is a year old, not more than a year old Supreme Court decision. Now, a lot of professionals wanted to apply the same concept even to GST. So you said that the service tax is not applicable for services that is being provided by club to its members. So can we apply the same concept saying any supply of good or a service that is being made by a club to its members will also not be liable to GST? And many found reasons for saying yes also. But now before losing much revenue on this, the government has introduced a new subsection under Section 7 saying that any activity or a transaction that is being done by a person other than an individual to its members or its constituents for a consideration will be treated as a supply. So it is to negate the effect of the Supreme Court decision in the case of State of West Bengal versus Calcutta Club. So these are the other provisions under GST that was also part of the budget. So one is Section 50, that is interest on delayed payment of taxes. So earlier we had an amendment stating that the interest liability would arise only on net cash. Interest would apply only on net cash liability. Whenever you have failed to pay the taxes on due date, you will have to pay interest only on the total liability less input tax credit. This clarity was not available when the act was introduced. Later came in a provision at a later date. So again, we had a confusion whether that provision is applicable from the date on which it has been notified or from the date of introduction of GST. The principle remains the same of charging interest on the net cash liability, but then we had a doubt because it was not specifically stated. So there was a lot of confusions around it. Now the government has clearly clarified that it is going to be applicable from 1st July 2017. From the introduction of GST, it's going to be applicable. The next provision is on Section 83, that is provisional attachment. So earlier, a department or a proper officer can do an attachment of a property, or it can be including a bank account, attachment of a property including a bank account for a period of 1 year if you're covered under any of these provisions, that is Section 62 or 63. If in case you're liable to file returns but you have not filed returns in spite of receiving your notice, or you're liable to get registrations but you're liable to get GST registration, your turnover has exceeded the threshold limit but you have not got your GST registration, then in that case some proceedings have been initiated against you. In that case, the proper officer had the authority to attach your bank account or your property provisionally. Now, this was during the pendency of any proceedings. So the proceedings have already been initiated, but it is pending to be completed. In that case, your property can be attached. But now they've expanded the provision. They have expanded the scope of the provision, saying that any initiation of proceedings under any of these chapters, mostly it is 62, 63, 64, 67, 73, and 74. Most of the provisions are this. Just an initiation of proceedings can enable the proper officer to attach your bank account. It's quite a risky provision. I think we will have some suitable amendments before it becomes an act, before it is being introduced to the section. I think we'll have appropriate word correction there. So that is on the GST part. Now,
Harini, how many slides are there more?
Some 2 or 3 more slides, sir.
Yeah, another 3-4 minutes if you can sort of.
Sure, sir. I'll run through the slides. Yes. So there is a new cess called Agriculture Infrastructure and Development cess that's been introduced. So as I was stating at the beginning of the presentation, the finance minister made a remark saying that this cess is going to be a cess for the purposes of categorizing it as a cess. It is not going to increase the total cost from the total cost at the end of the final customer. So it's going to be either a reduction or an increase in the customs duty in case of imports, or reduction in the increase in the basic excise duty in case of excise. So only, so it is not on all the goods, it's only on the specified goods that is being stated under the 1st Schedule to Customs Tariff Act and on the 7th Schedule to excise goods. So I leave the presentation with the organizer. You may have a look at the goods that are liable for the cess. So these are the other provisions that have been introduced in the customs. So the bill of entry, can be filed the next day after the receipt of the goods. Now it needs to be filed 1 day in advance. You can't wait even till the date of receiving the goods. You'll have to file it 1 day preceding the arrival of the goods. And then the bill of entry, amendment of bill of entry and shipping bill was not possible earlier, so that led to a denial of a lot of benefits earlier. Now it can be amended, so you can get the customer can get the rightful benefits. So all these provisions here, whatever I've stated, there's going to be a common portal for the customs for registration, just like the GST portal, which is enabling you to register, pay taxes, file returns, everything all under one roof. There's going to be a new portal for customs as well. And it is going to be beneficial for the department offices as well. They need not send you only the emails to your mailbox stating that there's going to be a notice. They can also serve the notice through the customs portal. So all these are in line of easing the ease of doing business, more on the ease of doing business. So that brings us to the end of the discussion. I've just highlighted the key points. You can always contact me if in case you would wish to know more details. Thank you very much.
Thank you, Harini. Again, that was quite exhaustive. And just for the benefit of the members here, GST, of course, all of us have been used to this now for the last 4 years. Nothing has changed as far as our business is concerned. I just wanted to sort of clarify to all of you, interest on loans is exempt anyway. You need to collect and pay GST on your other charges limits. So that's the only thing that you need to take care of. It's more or less status quo. But 2 important points is the extent of GST frauds that have happened on the input side. I think that is a matter of concern. 5 chartered accountants have been arrested recently for conniving in some of these frauds as well. I think this is a very disturbing phenomenon on the GST side. And sooner we also comply with the law, better it will be for all of us also to talk confidently to the government agencies also. But these are some of these aberrations that are happening. The customs portal is very important. Technology is going to play a very key role on customs, just like it has done on GST. So thank you, Harini. And that was a very, as I mentioned, a very detailed and an exhaustive presentation. It's good that all of us know that some of these changes are happening. I have allotted about 15-20 minutes for Q&A. I'm very tempted to first call the name of Alok Sondhi. I saw his name logged in. He's all the way from Jalandhar. I want him to come down to Chennai, logging in and at least saying a couple of words to all of us here. Alok bhai? Unless he is logged in, but he is not.
Yeah, here. How are you?
Yeah. Yes, Alok ji. Well, I want to hear your voice.
Yeah, it's wonderful to be part of the
There is some Wi-Fi problem or?
Yes, sir, his connection is not clear.
Okay.
web meet, and it's excellent to all. Anand, it's always a pleasure. Can you hello?
Yeah, I think some internet connectivity issue. Yeah. Yes, Alok ji, or
maybe if you could also type in the question, we can probably.
Yeah. Okay, then we'll bring him in. We'll bring him in later, or
Yes.
Okay.
Am I audible? Am I audible or not?
Now you can go. Yeah, go ahead, Alok. Yeah, please go ahead. Yeah.
Yeah, great. It is nice to be on the Zoom, and it was a pleasure listening to all the learned speakers, and it's always a pleasure to see you, Anand. It's always my pleasure. Very educative. Compliments.
Thanks, Alok. Already one question has come from Hemant, and I don't want him to raise that question in a loud manner, lest the authorities hear him. He wants to know if PPF interest also is going to be taxable. I have a lot of PPF investments. I don't want it to be taxable. This is only for employees' provident fund and not for public provident fund. Am I correct, Vinay? I don't want to steal the thunder from you. You have to answer this question.
So currently, public provident fund is covered under Provident Fund Act 1952. So one of the interpretation is that even the individual contribution to public provident fund would be the interest on that over and above 2.5 lakhs would be taxed. Because the amendment has come for both the sections, wherein there are two sections, section 11, subsection 11 and subsection 12, which provides for exemption for interest portion from Provident Fund. So one of the section covers the Public Provident Fund Act, which is notified by central government for the purpose of subsection 10.
So that's bad news. You are saying interest on PPF also is no longer tax free.
Yes, over and above 2.5 lakhs.
Over and above 2.5. That's okay. Okay. Any other question? I think there are 4 on the chat box. Maybe you can just unmute and raise the question, whoever it is.
I think Kailash Manji has a question.
Yeah, Kailash, please go ahead.
No, Hemant has already asked it.
Okay.
I have a question. PS Balasubramaniam.
Yeah, please, go ahead. Yeah.
I have a question to Ms. Harini Sridharan.
Yes,
See, you were actually explaining about the amendment to the provision of law with regard to providing of services to members by a club. But what is the position with regard to collection of membership fees? I mean, maintenance charges in the case of a housing society. Do we have to actually pay, this GST? Previously, service tax was payable provided the amount from per person was in excess of a particular limit, 3,000 rupees. Then it was, I think, increased to 5,000 rupees. But with regard to GST, what is the position?
The same position continues, sir. If you exceed a particular threshold limit, you will have to pay tax on that. The same provision applies.
20 lakhs or 5,000 rupees per member. 20 lakhs for the association or 5,000 rupees per member. That is a provision, is it, currently?
I will have to refer to the exact threshold limit, but if it exceeds the threshold limit, you will have to file the, you will have to pay GST. I'll probably get back to you on the exact threshold limit, sir.
Okay, doesn't matter. Okay.
I guess the threshold limit is 40 lakhs.
It was 20 lakhs. It has been increased to 40 lakhs, is it?
40, 20 to 40.
No. On the threshold limit for registration, 20 lakhs and 40 lakhs is applicable, sir. But as far as the maintenance fees is concerned, there is a threshold there. So if your threshold doesn't, if your maintenance fee exceeds that particular threshold during that year, you will have to pay GST. Otherwise, you need not. If you are a resident welfare association.
It used to be 5,000. I don't know what is the current ceiling.
I will get back to you on that before the close of this meeting, sir.
Okay, thank you.
Any other question?
Anand sir, if I may interrupt, sorry, it is 7,500. If it exceeds 7,500, you will have to pay.
Okay.
From 5,000, it has been increased to 7,500. Okay.
See, one issue industry is going to face, and when I say industry, it is about all the financiers, NBFCs, registered, unregistered, small, medium, big, is not directly on account of this budget. Of course, this budget is going to look at financial sector in a very holistic manner. But I think what we need to consider is the new discussion paper which has come, forcing some of these small companies to be registered, upping the limit from 2 crore to 20 crore. That's a separate discussion. I'm not saying that we need to discuss it today, but it's a very, very major point which has been now put across by the RBI through the discussion paper. Comments are being now received. So I think that's the most significant item for consideration by the small financiers today. That's the main thing. But
I agree, Anand.
Yeah. Yes, please. Yes, Kailash ji. Please go ahead.
Yeah. That is a very, very valid point which you raised. And I think the whole industry has to look at it very seriously, and it is going to affect many people. Already with great difficulty, people were able to raise from 25 lakhs to 2 crores. And now there's a bank trying to go from 2 crore to 20 crores. I think this country needs more small NBFCs to continue to work. And therefore, this has to be seriously looked into, and we should give a proper representation.
Yes, sir. Very well said. And another thing is, it is now only that the business actually has started looking up very confidently. Over the last 2-3 months, if you see, November, December, January has been pretty good as far as the vehicle sales are concerned. Commercial has done well, two-wheeler has done well, passenger cars is rocking. So automatically the financing business momentum is sort of increasing now on the new vehicle side and the used vehicle side. So this is the period now, the business has to make the best use of it. And alongside that, the growth agenda of the government, I think the next 2-3 years looks very, very vital as far as the business of financing is concerned. How we tackle the regulatory framework is something else. But I think we are poised for a very interesting, exciting period of time as far as business is concerned. Any other questions directly on direct? I know direct, indirect taxes, there are not many provisions directly affecting our business, but we thought as organizers anyway, it is good to have a glimpse of changes so that tomorrow we should not be in a situation that we're not even aware of some of these changes. That's the purpose of this exercise. So
yes,
if there are no more direct questions on this subject, even indirectly, if there are some issues, some comments, people are willing to make another 5 minutes, we can spend on this, otherwise we can close it.
Anand, just one question.
Yeah.
See, for persons of the age of above 75 years, now there is a provision that they need not file the income tax return, provided they get only interest income and pension income. But many of the senior citizens are occupying board positions and they are in the receipt of sitting fees.
Correct.
So they will not be eligible for this exemption, one. Second is, assuming that a person complies with this, that is, he is in receipt of only interest income and pension income, but his total income exceeds that 3 lakhs of rupees basic exemption. So do we have to take it that he doesn't have to pay income tax, or he will have to pay income tax, but he is only given exemption from filing the income tax return?
Vinay?
Yes, sir.
I will see the provision after 15 years. You can answer this question now.
Okay.
Sir, if you don't mind, can you repeat the second part of the question?
No, because if a person is in receipt of only interest income and pension, okay, he complies with this provision for exemption. But if his total income exceeds 3 lakhs of rupees, which is the basic exemption limit, do we have to take it that he doesn't have to pay income tax, or he still have to pay income tax, but the only thing is he doesn't have to file the income tax return? What is the provision?
So in this case, what is the amendment that is proposed is that the specified person, he would have to give a declaration to the bank declaring his pension income, and also giving all the deductions relating to chapter 6A, and also the bank, while deducting TDS, would make sure that they take into consideration all the 6A deductions and even considering 87A rebate. So technically the burden of deducting tax, or rather paying tax from the senior citizens, has been moved to the banks. So it's just like an employer discharging the liability of employee on the salary. So he will not be required to file income tax return if he's falling under this particular amendment which is being proposed, wherein he is receiving only the pension income and interest income from the same specified bank account.
So if the total interest income exceeds 50,000 rupees, automatically the bank will start deducting. If it is going to exceed 50,000 rupees in a particular case, then the bank will automatically start deducting the income tax unless he files form number 15H.
Correct.
But if he doesn't file form number 15H, and if the bank is going to deduct income tax on his interest income, he will still have to file the income tax return in order to claim the rebate, is it not?
Now, this amendment also gives the power to the bank to deduct TDS in the new rate after considering the rebate. So it clearly says that rebate and Chapter 60 deductions, if any, would be required to be declared in the prescribed form, and that will also be considered by the bank. So rebate will be taken care by the bank, and only after considering the rebate, even after that, if there is some tax, they would be paying it.
So
there would a specific
what they do is once it exceeds 50,000 rupees, from rupee 1 they are deducting. If it is 50,100, then they deduct income tax on the entire 50,100. That will not happen, is it not? Okay. Okay, thank you.
Devan, we can wind up or?
Yes, sir. I request Mr. Shreyans Sethi of Madras Hire Purchase Association to propose the vote of thanks, please.
So before he does that, I think all of us should give though we are in virtual format, physically we should give a round of applause for these two youngsters who have taken a lot of efforts to put together these slides, cogently explaining all the provisions. And thank you both of you for having taken time out for this presentation today. Anyway, the formal vote of thanks will follow.
Mr. Shreyans, you can unmute yourself, please.
Sorry. Hello all. It's good to see a lot of members over this e-media. I thank you for being here to get the inside view and understand the factors and equations in easy terms on the India Inc. Budget 2021. I would like to propose my vote of thanks on behalf of Maha, SIFA and FCA. I take this opportunity to thank our today's guest speaker, Mr. Anand. He is a real motivator, and anytime you can see his energy, evergreen. He is not old. He is still young. I believe he's very young still. And Mr. Vinay Chajed, Ms. Harani Sridharan, the young faces as motivated by Mr. Anand should come forward and deliver such kind of on this platform and have their knowledge expanded. And thank you for taking time from their busy schedule and enlightening us with the outcome of India Inc. Budget 2021. I extend my gratitude and thank to our President Rajesh Singhvi, Devang Chairman SIFA, Pawan Trivedi for SCA, Ajay Nahar, Ankesh for their efforts in coordinating and conducting this webinar smoothly. Thank you team for the earnest efforts, and last but not least, all the members who have attended today. I thank you for joining this webinar. Hope you would have gained a lot of knowledge. Thank you once again. Thank you all.
One suggestion I wanted to make to the organizers: from next time you do this virtual meeting, you should ask Swiggy to deliver the high tea to the respective homes.
Taken, sir. Taken.
Well taken, sir. Well taken. We will definitely consider.
Will there be a GST on that?
Okay, thank you.
Anand, there'll be a GST on that, right?
The GST reverse charge, the association will pay. We don't have to pay. Okay, thank you very much.
Thank you.
Most of the chambers, clubs have saved a lot of money.
Yes.
They have not arranged events, so there's no expense. Even if they arranged on virtual form, they save a lot of money on not arranging high tea, lunch, dinner as the case. Your profits have gone up.
Yep.
Okay. Thank you, sir. Thank you, one and all. Thank you.
Thank you, everybody. Thanks, Chairman.
Thank you for a wonderful opportunity.